Good evening, ladies and gentlemen. John Kelly for Options University on Friday, December 9th, 2011. The disclaimer: trading always has been, always will be risky. Learn what you can here at Options University to get that competitive edge so that you don't make mistakes like this gentleman, Mr. Draghi, President of the ECB, European Union, cut rates on Thursday morning down to 1%, which the market cheered and made a prepared statement and then started to answer some questions. And we'll see what the market reaction was Thursday after he sort of had an oops moment. But first, the rate cut to 1% was good. Merkel of Germany came out and said that the ECB will not be allowed by the Germans to monetize sovereign debt. British Prime Minister David Cameron came out and said Britain will veto any financial union. The bottom line at the end of the day, at the end of the week, was the European leaders agreed to closer financial ties, but they don't have to make a decision until April, so stand by. How did that sit well with the markets? Well, as you can see here on Thursday, it did not sit well at all. We were up about 100 points after weekly jobless claims and the initial rate cut by the European Union, and then Mr. Draghi started to talk, and we immediately went down a good couple of 100 points. But as I said, by Thursday evening, they had an emergency session in Europe, the European leaders, and said, no, we're all going to get together and work closer. So we rallied right back today to where we've been. We almost came down to the 50-day moving average. We were back up, almost butting against the 200-day moving average by the end of trade today. The VIX, this is the clearest indication of how what was done in Europe is summarized by the market. The fear trade, after touching this 200-day moving average, came back up into the old channel between 48 and 30, and it looked like we were headed higher. But today's move down in the VIX tells us the fear trade is off. Now, watch on Monday to see if we come down to the 50-day and break through it this time. If we do, then the fear trade is truly off, and the market is going to finally get its Santa Claus rally. I'll be talking Sunday more about the fact that the Fed has their meeting Tuesday and Wednesday, but with the action, the coordinated action of the Fed and the central banks around the world last week, I don't think we're going to see much in the way of surprise, particularly with the conclusion to the European Summit, which really isn't all that satisfactory. It's going to linger for months before we finally have final resolution, but I think the framework has been drawn. As I said in economic news, weekly jobless claims came in at a surprise down to 381, which is continuing the general move down, whether it is people who are getting jobs and there are more jobless claims or people who are giving up. That's yet to be seen. The bet is that people are giving up, that we're just not creating enough jobs. Wholesale inventory was a pleasant surprise. They expected 0.2% and got 1.6. Michigan sentiment came in the highest in 9 months, and the trade gap today narrowest since 2011. Questar Pharmaceuticals issued a pocket pivot today. I'll explain that in the gold member section. Humana has a new price target from Wedbush of $102, and Costco was a beat on earnings, but their guidance was weak, so the performance is that. So how do we trade this market? What can we expect going forward? We'll look at that in the gold member section next.